the Treasury Bills market has seen some bearish sentiment so far this week. Traders at Access Bank say that they expect a new trading session today as the Debt Management Office offers 149.6 billion naira in the Treasury Bills auction today. Senator Audu, the team member for Treasury at Access Bank, joins me now as we look at the markets here in Nigeria. Thank you so much for your time, Senator. And there's quite a lot when you look at what's happening in the markets. But just bring us up to speed on what you expect from the T-bills auction.
Thank you, Kenneth. Thanks for having me. So as you rightly said, the DMO is offering 149.64 billion across the standard offerings today, the 91, the 182, and 364-day bills. We expect trends in the market to be largely driven by liquidity figures. Opening yesterday, we saw that the market is in a repo of about 125 billion. So we expect those liquidity constraints to be the key determining factor of rates in the secondary and primary market. With regards to our expectations for this auction today, we expect that rates would inch up from where they closed at the last auction. At the last auction, we saw rates close at 6%, 8%, and 14.74% for the short, medium, and long-term offerings, respectively. So we expect that rates would close slightly higher at this auction today.
All right, but in terms of the interbank rates, how are you seeing the activities continue to play out for the rest of the week then?
Okay, for interbank rates, we've seen the OPR, the open repo rates, and the overnight rates trade around the ceiling. So we've seen the open repo rates at about 18.63% and the overnight rates at 19%. So this is largely indicative of the liquidity constraints that we're having. We've seen this filter again into the fixed income market. On the bond side, there's an auction next week. And on the FX side, there's a retail auction on Friday. So we see more activities taking liquidity out of the system rather than in. With regards to expectations on the bond auction, there are about 4 bonds on offer. 2 new bonds have been introduced into the calendar. At the last auction, we saw the 28s, the 32s, the 37s, and 49s on offer. The 2 longest bonds have been replaced. At this auction, we have 2 new entrants, the 2050s and the 2042s. And we expect rates to increase across both those bonds and across all 4 bonds on offer, largely due to these liquidity constraints.
Yeah, because how are we seeing investors play out there? Are we seeing investors look more long-term in terms of those longer-dated bonds?
We're seeing investors largely play on the short end and with a short-term view. And largely because towards the end of this month, on the 27th of April, we'll have a significant bond maturity of over 700 billion. So market participants are taking positions ahead of that maturity. So I'm taking a long-term view might not be the right path to follow for many of these investors. So we've seen a lot of play across the short end, or if we're seeing those plays across the long end, we're seeing those plays with a very short-term view.
All right, but in terms of the liquidity challenge, any respite in the near term, looking down the line, where can we see some respite in terms of what was the challenges here?
Okay, so we expect to see some maturity. So next week, for example, there's the bond coupon coming in of just over 140 billion. But the big maturity that most market players are looking towards on the fixed income side is that bond maturity on the 27th of April. As I said, above 700 billion. So until then, we expect market participants to mostly source liquidity from structured trades such as repos and total return swaps.
But what are you expecting in terms of secondary market activity then?
So we expect the bears to continue to take the center stage. We expect most people with interest in buying to mostly remain on the sidelines with exercising some caution ahead of these liquidity events that we're expecting to come in about 2 weeks from now. On the liquidity side as well, we expect most rates to come out at to play more on the high side. Inflation figures, for example, are expected to come out this weekend. We saw the last figures for February come out at 21.91%, an increase of about 9 basis points from the 21.82% that we had in January. So we expect market participants to also look forward to those numbers and take them into consideration in their projections.
Yeah, but very quickly, what's your take on the debt management office and debt strategy going into the second quarter?
Going into the second quarter, we expect the DMO's focus on the short end to be mostly to roll over the maturities that come up as we've seen happen. So the debt management office ensures that at the minimum they mop up the maturities that have come in. On the long end, we expect an oversubscription and an over-allotment. So we've seen increased borrowing from the DMO, particularly on the bond side, the long end, rather than on the short end. So we don't expect any significant shift in that strategy going forward, particularly again, as they have those significant maturities coming up, and as well as the budget deficits that they do need to finance in some way. And considering that the Eurobond market is not at its most accessible at the moment, we expect the DMO to, of course, look inwards for their budget deficit needs.
All right, we'll see how investors play at the primary market auction today. Thank you so much, Senator Audu there, a team member for Treasury at Access Bank.